Welcome back to Fair Fade Investing. Today we're taking a look at Salesforce Incorporated, ticker symbol CRM. First, we're going to start out with the fundamentals and numbers of the business, and later we're going to dive into a hypothetical framework of where the stock could be headed in the future. First thing here, market cap of $280 billion versus enterprise of $283 billion. We've got share price of $289. Price to earnings of 110. Looking at their financial strength, they have 93 cents for every dollar of debt in their cash debt ratio. When it comes to their gross margin, operating margin, net margin, and free cash flow margin, all in the green for the industry. And versus history, also some of the better numbers for both free cash flow as well as operating margin in the last 10-year period. So we do see here that versus the industry, their gross margins and free cash flow, as well as operating margins, are the best in the industry. Versus history, their gross margin is just around the median. But these numbers here tell me a little bit about how the business is doing. Looking into management, I use ROE, ROA, ROIC, and ROC. We see fairly low numbers here for these first three, and for the return on capital, they have high numbers, although relatively green in relation to their historical performance. Looking at their trailing 12-month revenue, they have $33 billion, just about $34 billion in revenue versus a market cap of $280 billion, trading for roughly 8.5 times their revenue. When we look at their price to earnings ratio, we see that versus the last 10 years, the price to earnings ratio is slightly below the median but well above the minimum. We see revenue growing steadily over time, cash to debt fairly in pace with each other over time. On a trailing 12-month, we see that net income is slightly declining, although been picking up recently, and we see revenues fairly steadily increasing over time. We see cash to debt in line with each other. We see share sales and then share buybacks starting in 2023 and up to the present. To get better insight and see where the stock could be headed, let's run a DCF. So in the DCF, we see business predictability, 4 stars, fairly predictable business. Earnings per share for the 10, 5-year, and 3-year average periods, we have no data. For free cash flow, we do have data for the 10, 5, and 3-year periods. We see 10-year of 22% annual return, 5-year of 15% annualized, 3-year of 13.4% annualized, so slight deceleration in their growth. Basing our analysis on free cash flow, with a growth stage of 10 years at 20%, we see that there's a margin of safety of negative 3.7, so just about 20.5% priced in for the next 10 years versus the historical of 22. Obviously, if we were to increase this, then we see a higher margin of safety, so 25% growth would equate to roughly 25% margin of safety. 30 would leave us at 46% margin of safety, and then if we go below something like 18% or even closer to that 15% of the last 5-year period would equate to a negative 45%, so a fair value of 200 versus current of 289. So the company, at least on a free cash flow basis, seems to be fairly priced into their last 10-year performance. If we do see acceleration, then we could easily head up into the 365 range, although it looks like over the last 5 and 3-year periods, the free cash flow growth has been slowing. This is my theoretical framework and assessment of CRM Stock, Salesforce. Leave a comment below if you have questions or want a company reviewed. If you enjoyed the video, please leave a like, subscribe, and I'll see you next time.